Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram and Mike Webster here with a breakdown of the action in today's session and a look at this week. Today is Friday, May 10th, and we saw a win streak for the Dow. I know, Webby, that's the first item of interest on.
Those are fighting words, Allie.
Not really the first item of interest on your list, but we do have a lot to get to, and we are going to get technical today in this Friday extended version of Stock Market Today. But we've got some high-level market action and a couple of stocks that we want to take a look at first. We've even got a historical precedent and some homework this week, so lots of fun. Tickers we're going over include ANET, TSM, and FICO. But Webby, I want to kick it over to you. Just brief opening comments on the market action this week.
Yeah, no, of course we haven't had an official follow-through day, but we've had a few in spirit, which we'll talk about. And more importantly, we're starting to trend above the 21-day, which is the hallmark of, any bull runs. It's really about living above the 21-day, trending above it. And that's what we're going to focus on today. The market is very healthy, in my opinion. It was able to withstand some really serious damage that we had a few weeks ago that put us very bearish, and we should have been bearish. But the market, you always have to move with it, and it's switched, and you just have to bend like a tree in the wind, and that's what we're doing.
Exactly. Yeah. It's very impressive, the snapback that we've seen. And so we're going to go over the developments that unfolded this week versus where we left off last Friday when we did this show. So we'll get to that. But first, let's take a look at the major indexes and the daily action. So on the day, the NASDAQ essentially flat, down just ever so slightly. The S&P 500 on the day up about 0.2%. We did mention the Dow, so we'll go there. 8th day winning streak, best week of 2024 for the Dow. So hey, we'll take it. More things participating, we will take it. In small,
as far as the Dow goes, even though I don't use it, people who don't know me don't know why I don't. It's because it's price weighted, and we like market cap or equally weighted things. But the general public uses the Dow a lot, and you say, oh, the Dow is up X number of points or down X number of points. So when it gets around round numbers like this, the 40,000, it does become important from a kind of a mass psychology. So as we get through there, you'll start hearing it a lot in the media. So it does help, but it's not something that we focus on from a technical standpoint.
Yeah, good point. Good point. Some good context there. I wanted to just quickly pivot to the Russell 2000 small cap index, which was down about 0.6% today. Mid caps we can check in on as well. Also trending higher above key levels. So we like to see that as well. So Webby, let's go over to the NASDAQ and get some thoughts here on the index action this week.
Yeah, you really couldn't ask for more of what we had this week is, we're up there and we're holding tight. Yes, we had kind of a stalling, churning type of action today with that weak close, but that's fine. Given the move that we've had, most importantly, we've been able to stay above that 21-day and above the 50-day, above 16,000, all those key areas. And really, it's been tightening up. And over the last month or so, it's really been loose. And so this is very different. So you're always looking for what has changed, what's abnormal, what's normal. And this is pretty much picture perfect as far as after having a big move up there, like we had early in the week and late last week, that now we're just holding and tightening. You can see that on a weekly, the difference between the high and the low versus 2 weeks ago, and then that bad break, 3 weeks ago, that's night and day. I mean, that spread is telling you everything. What is it telling you? That you're at equilibrium right now. When you have a lot of movement, that's price discovery. That's the bulls fighting the bears and back and forth. When you settle in and you start tightening up, lots of ways of measuring it. The simplest way is really just the spread, the distance between the high and the low on whatever time frame you're looking at, and that's telling you that everyone is in balance right now. Now we could come down a little bit next week and still be fine. That would be healthy and normal, but we're going to keep an open mind with things. The close like we had today gives you an expectation of some weakness on Monday. I prefer weak Mondays rather than strong Mondays, because when you have a strong Monday, there's this tendency, like a gap up on a Monday tends to get filled. So a weak close lends itself to a weak open on Monday. Who knows what ends up happening? But that would be an ideal place that if you're light in the market, you would want to be putting some money to work, increasing your exposure, unless it's a horrible gap down. But as long as it's, holds within the low of a couple of days ago, or maybe a little bit below that, that would be normal. And that's what I expect. Yeah. But, we don't predict, we just look and interpret and think of what would normal be.
Exactly. Yeah. That scenario analysis, which I think is so important, and a big distinction between predicting is just looking at the different scenarios that can potentially unfold so we can be prepared. Let's also take a look at the S&P 500 making more progress this week. Webby, when we left off last week, we were right at that 50-day line. And it seems like we passed a key test this week.
Yeah, so SPY versus, pull up NASDAQ again so people have that fresh in their mind. Right. So that moved up and held in tight, right? Now let's go back to SPY, and that has kind of been building. So it's the baton going back and forth between the two. So this one looks like it's a magnet for the old highs that, the 52.64, that it wants to go there. So we'll see what ends up happening on Monday. There is a little bit of a divergence. We prefer looking at NASDAQ typically just because they tend to be more of your growth names, your IBD style names. But the S&P, as we always say, that's what the industry looks at. That's a benchmark for nearly every, portfolio manager out there. So the fact that that's been rising each day for the most part, that's significant. And our distance between the low and the 21-day is expanding there, which is nice and healthy.
Yeah. And speaking of the 21-day, we're getting pretty darn close to getting that back above the 50-day, which is another key test, that we want to see, a key development that we'd like to see.
Exactly. That's where the 21-day is in relationship to the 50-day is important. Look back in November when that crossed above it. And when it crossed above it, the green line going above the red line. So the red line is your 50-day simple. That's what the most people in the industry look at, your 50-day, the red line, and your 200-day, that black line. But we like to look at those. In addition, we like to look at the 21-day. Some people like to look at the 10-day. That's fine. A 5-day or an 8-day exponential. Those are fine too. I use those. But I like to keep things as simple as possible. The 21-day moving back above the 50, that's very important for a trend. And we are trend followers. We're not bottom buyers. There's nothing wrong with being a bottom fisher or someone who likes to pick bottoms. Some people do that in a, that's kind of their gig. That's not ours. We like trend following, so that when the green line gets back above that 50-day, the red line, that's a very positive thing. And then we'll be talking about power trends in the coming weeks if this continues. But that's a little too much for today's show.
Yeah, one step at a time. But that baby is where baby steps. That's the ideal scenario, though. Okay, let's take a look at some notable stocks from this week. Arista Networks with a breakout on Friday, up over 6%, some nice volume, but more importantly, I think the relative strength line hitting a new high as this stock breaks out. This wasn't the prettiest of bases, Webby, but we got some tight action here, and it moved above the 50-day line in a nice way before today's breakout.
Yeah, let's toggle over to the weekly. Excellent analysis there. And let's go down to the earnings numbers. And, this is an institutional quality stock. When you see all those blue numbers, you don't have to get hung up on them. That's your quarterly earnings, quarterly sales. Even though we're seeing some deceleration with the sales numbers, they're still high enough where this is, a quality institutional name. Now, the base that you were talking about, those 2 red weeks there, those were really bad. And that's not what we want to see in a base. But we did have this nice 3 weeks up in a row, closing at the highs with big spreads, kind of counteracting that. It did undercut the low of the prior base. So if you hover over this base, it'll say that should say it's a stage 1. Yeah. So that the fact that we undercut that last base, that's meaningful, because, and we can toggle over to the daily for folks to see that. When you undercut that, that's an area that 253.08, that's where a lot of people are going to have their stops, either a mental or a physical stop, meaning, hey, as long as it holds above that last base, I'm going to stay in it. But then once it undercuts that, that's really key to look at and see, how does it undercut? What does it do afterwards? When it undercut it, I thought it would look terrible, frankly.
Same here.
And really, until 3 days ago, it didn't really look right, because you would gap back up underneath that 50-day, and that could have gone either way. That's a place where people like to short. So really, that nice decisive move, break back above the 50-day, and this follow-on move that we had today that surprised me, that's great action. That's telling you this is a leader that you want to figure out a way to get back into. It's only 2% above our standard pivot, but this is a cup without handle. We prefer to have a handle, meaning it would shake out, kind of drift down, maybe give us an upside reversal to get into. So now you're in this place where it could come down and test 300. That would be normal. If it does that and gives you a nice upside reversal, that's what I'm looking for to get in. If it continues higher, then I'm just going to wait for it to tighten up to give us an entry.
Okay, well, we'll add it back to our watch lists in any case. Let's also take a look at TSM with a double bottom base breakout. We had some sales numbers out today, and the stock up 4.5%. So looking pretty good here.
Yeah, this is really important for the entire chip space, which is, really been leading the whole AI theme. Although it's, a lot of them ever since NVIDIA, which we both have positions in. Just pull up NVIDIA for a sec.
Sure.
That when that one had its downside reversal, that was telling you, okay, doesn't mean the stock is done. It was just a lot of people were profit taking and it needed a rest. And that's what it's doing. It's resting. Another word for that is base building. Now let's toggle back over to the TSM. This has formed a really nice double bottom, classic looking, where that second bottom, the 125, undercut the earlier bottom, the 133. There's ways of getting in a little bit earlier with a shakeout +3. We can talk about that on future shows, but in a nutshell, you basically take that 133.03 and you just add 5% onto that. And I should have done that before the show, but that would give you
do math on this show. That's okay.
139.68 is where that entry would have been, and it's pretty much right there, right where you marked it. So it was also, close to the 140, which is kind of a round number. And you can see on the chart that would have made sense. That's where you could have started buying. But of course, we had those numbers today that do move this stock, and it does move the entire group. Right. So you could have nibbled there with a small position and then waited for today and then added to it here. That's a classic entry. It's not too late to buy it. So I think this is actionable if you need some exposure to this group. Yeah. You could also do the SMH. That's something we put on Swing Trader today. That's just broad base, has a lot of, TSM is in there. Now that didn't close nicely, but a lot of things didn't close nicely. And that happens. It didn't break in any way. The chart is still fine. Chips are still, one of the leading groups, if not the leading group. Right. So it looks good.
Yeah. I mean, a great level to manage risk against. We've formed a bottom, got above the moving averages, tightened up. So all things that we like to see. And I was just going to say one more thing about TSM, and that is we have a blue dot on the weekly. So, we're focused on those stocks showing that relative strength, that price outperformance. So it checks off that box too.
Yeah. And while you have that up, why don't you hover over those blue areas? the shaded areas. It's kind of hard to see, but those are 3 weeks tight, and that's something that Bill O'Neill, the founder of IBD, um, came up with years ago, before I was born, of noticing that in bases or out of bases, when you held 3 weeks tight or longer, that was significant. And some of the work that the two of us did, maybe 15 years ago, was finding out that 2 weeks tight is important as well. So we don't highlight those, but yet we'll work on that in the future. But whenever you see those blue shaded areas on your market surge charts, which everyone should be using market surge, best product out there for the IBD methodology, those are areas that you want to focus on. The more of them that are on the chart, the more institutional sponsorship. That's our indirect way of looking at sponsorship.
Yes. Great color there, Webby. Okay, we want to round out our stock analysis with FICO. And we don't quite have a blue dot here, but look at how that relative strength line shot up this week, with shares up more than 11% on the week. And I mean, this has been a steady Eddie winner over the long run.
Yeah, let's look at the monthly for a second. Now, it's great to have, thanks for best fit, makes sense here. That when you have a steady stock like this, then two ways of looking at it. One, the price action is in this nice trend up over years, really decades, but also that RS line, which is telling you versus the S&P, is it outperforming? When that green line is above its moving averages, it's by definition a leading stock. So it has that characteristic, but what's nice about it is it's not as volatile as the ANETs of the world.
Right.
Now let's toggle back to the daily. So it's kind of slow and pokey, and that's fine. And it, came off its highs by the close, but it was still powerful action that we saw today. And you want to be looking for names like this to get into, and it's acting nicely, up 3% for a name like this. But why don't you refresh the screen? I think the double bottom went away for some reason.
There it goes.
Okay. So it just went through its double bottom, the 1307. So that was, an ideal entry today. And let me just see, 1181 times 1.05. So 1,240 would have been, so 1,240 and a nickel would have been your shakeout plus three. So way down there. Yeah. So exactly. So there's earlier entries to get in there, especially when you're looking for double bottoms. Your early entry can be that shakeout plus three. Again, simply take your first low and then add 5 to 10% from there, and look and see, is there a logical place on the chart to get in? Doesn't have to be 5%, doesn't have to be 10%, somewhere in that range. If you're wanting exposure, use 5%. If you're wanting a little bit more conviction that the stock has actually moved, use 10%.
Great. All right. Well, thank you so much for dropping all that knowledge. Now we are going to go over to another couple of charts that you have, Webby, where we're going to take a look at the weeklies with the candles and the regression channels. So why don't we go ahead and pull that up?
Yeah. So let me know when you can see my spider weekly.
Yes, we're good.
You got it? Okay.
Yeah.
I'm finally learning how to do this. So we like to, as Bob Weir would always say, take a step back. And so this is, you want to take a step back and look at the weeklies, even monthlies, to get a sense for the trend and what's happening. And so this has been trending up nicely since November. And you can see the regression lines that we put on there. And then, of course, it broke it there. So it changed character. So we had to reassess. We had to turn negative until we saw it proving itself. Now on a weekly basis, you have this nice inside week here. Then you have this nice bar. People have all these words for candles. They have some Japanese terminology. I don't use those. I just look at them and interpret it if they're positive or negative. and all three of these are positive. That what you're seeing on here is the candle itself, the bar, the blue part, and I'll just blow this up so people can see it a little clearer. This is the open, this is the close if it's blue. If it's pink, this is your open, this is your close. And so you want to see blue bars in there in general, and you want to look and see how they were relative to prior weeks or prior days or months or intraday.
Right.
And so this one was an inside week. Doesn't really tell us anything other than it was a good candle, but the fact that you were still within that prior really bad break didn't tell us enough. It was indecisive. Then this one, you had the open here, traded all the way down to this area, and then close back above it. That's a great candle. That's a perfect candle that you want to look for. That tiny little body, which the body is that blue area, and that being blue, telling you that the close was higher than the open, and you traveled all the way down the head, all that price discovery. That's very constructive. Then we had our gap up on a weekly basis, and our close was pretty much near the peak there. So nice candle, and really change in character from what we saw over the last these 3 bad weeks. We'll just toggle over to composite just for a sec. Same basic thing there. The close was a little bit weaker, but we're looking for that trend to resume.
Yeah. Oh, and I'm already looking forward to looking at the horizontal levels. We've got some stuff to talk about for that, but we want to take a closer look here first with speaking of regressions. We're going to the daily time frame, and I remember, Webby, when the market broke really bad, you're like, all right, well, we can no longer use this channel. We've got to find a new one. Is it too early still for a new trend and a new channel?
Yes, it is. But I drew it on here anyways, just so people could see the difference. So this was a prior trend. This is the new trend. We like to start our regression channels. Look, I'll just blow it up. This is a spider race on a daily. Starting with our follow through day or changing character. This was our follow through day in spirit because we didn't have the volume that we like to have from an orthodox standpoint. But this is our starting point, and I did this regression out to here. And if I zoom back out, oops, wrong direction. Zoom back out, you can see that this trend is just too steep, right? That this was very steep, and this is too steep. So we're going to continue this out each week and wait. We really want to have more like about 50 days or so of trend before we start really using this regression line. But I just wanted folks, in case you were curious what it looked like, and we'll look at it on the composite as well. And again, it's just too steep, but it gives you an idea of, what's in character, what's out of character. So how you can do it, if you want to look at this before, before you really should, you would still look and say, okay, if it comes down to this green line and bounces, that's giving us more conviction that there's something to this new trend, this new regression. But again, we need more time before we can use it.
And, speaking of extrapolating this and, that being too steep of a trend for a longer time period, what about also just in terms of adding to your conviction here, seeing how, okay, off of these lows, we are seeing a little bit of oomph. Does that tell you anything?
Yes, and we will circle back to that a little bit with a Webb RSI. I think that'll illustrate it a little bit better. But yes, we're getting that oomph that we want, some power in there. Certainly a little bit differently, you can see this week between the SPY and composite. You can just see how the SPY inched up like we were talking about earlier on the other charts.
Perfect. Well, I love that. A tease for later on in the show. We're going to
stay tuned. I will look for you and find you if you end the show before it's over.
Well, we have some more juicy charts to show people. All right, now we want to take a look at our retracement levels.
Yeah, so we'll just review this quickly because we went over this in the prior weeks, that this is why SPY was holding up better, that our 50% retracement, we do 50% retracements on everything from interdays to monthlies. It was this move from over here to our peak, and the 50% level was a 492 and change, and it held above it, which the composite, the NASDAQ, wasn't able to. It undercut it. So that was acting more negatively. Now we bounced up. We're back near those highs, of course. If we're able to take out those highs, that will be meaningful. And, it would actually be nice if we don't take them out for a week or two, but you can't tell the market what to do.
Exactly. Yeah, we'll have to see. And then we have other 50% levels from the recent highs to the recent lows we want to check in on.
Yeah. So we're looking at this at, I'm going to zoom in or back out for a second so you have a point of reference. Now we're going to zoom in, and this is a different 50% retracement from our recent peak down to our recent low. And then once we got above those levels, that's really when you had to kind of change your mindset and lean more bullish. The longer you stay above it, the more bullish you get. We've been staying above it there. Now let's look at it on NASDAQ. Same thing here. Once we gapped above it, we've been decisively above that 50% retracement. Excellent action.
Yeah, we like to see it. Okay, let's now go to our horizontal levels where we're taking a look at certain candles or I guess levels of interest and seeing where we are versus that, and percentages as well. But walk us through the different levels that you're keying in on right now, Webby.
Sure. Well, we'll start with the SPY, and I'm going to blow this up a little bit. Okay. So on the downside, the ones in red, these are the levels that, and I like to put levels on my charts because it keeps me from vacillating. If you have horizontal lines on your charts or trend lines, and your stock or your indexes start going below them, you just need to wake up and just go, okay, this is breaking my expectation, either positive or negative, and adjust accordingly. So we want to have these lines in the sand there that's saying, okay, if it breaks them, we need to take serious action. So we'll start at the very bottom, and this is our low. If we break through that, then, we don't know how much lower we can go. So you would have to be, you'd be out of the market by the time it got down there, most likely, unless you had some, long-term gains or some stocks you had some, a lot of conviction and a lot of profits in. Now your next level up from there is your low 152, which is 499 and change. Then up from there would be your low of 53. That's a little bit more important. It could come down and test that, and the market wouldn't be broken, but you really wouldn't want it to get that low. And if it did, you would need to take some defensive action by raising some cash. And then you have this low, the 512.76, which is the low from the April 4th, that really bad break that we had, that kind of wide candle, horrible action. Then on the upside, just really our highs, our April Fool's Day high of 524.61. You would also look at the highs from 4.4. That's important, but it's pretty much almost right there. Now let's look at NASDAQ. And very similar. We have our line in the sand down there at the lows. A few more of the red ones down here. The low from 425, the low from 5.1. You could also look at the low from 5.2. That's important as well. Then we've got this one in here, which corresponds to your 4.4 low. And then the green one is your 4.4 high, which that's the next level we want to get to, the 16,468. So that'll be meaningful. And once we get there, it's really going to be a magnet for the old highs, which is our top line. So again, you can put a bunch of these on your chart. Look for areas that are logical, either trend levels that everyone would be looking at. There's times where you want to look at things that everyone is looking at, and there are other times when you want to look at things just you would be looking at, and you want to know the difference, because if it's the 50-day, everyone's looking at that, and stocks or indexes should get support around there. If it's just some day that is just important to you or to me, it's not as important to the entire market. So they can kind of break through them and then snap back.
Yeah. Great context there. Okay. Well, we mentioned the importance of the 21-day line earlier. So now we're going to take a look at these charts with just the 21-day line, because last week, Webby, you said, now that we're above it, we want to stay above it. And that's what we've done.
Yeah. So we've gone over a lot of jargon and a lot of charts and regression, this and trend lines and all this stuff. Really, on the simplest level, especially if you're new to trading, just look at the 21-day. You're above it, good things tend to happen. You're below it, bad things tend to happen. More importantly, if your low starts trending above it, which is what we kind of say once you've got 5 days with your low above it, trending and living above it, after 10 days, that's very meaningful. And you can see that it happened over here. And then once that power starts going, that trend starts going, what's in motion tends to stay in motion until it doesn't. The trend is your friend until the end, as I believe that Dakota used to say or still says. And then, broke below it. Our high was underneath it. That was meaningful. Now our low is above it. Let's just toggle over to the composite. Same thing here. Our low is above it and staying above it. It's that simple. You want to lean bullish as long as your low is staying above that, which right now is 16,050. And that's your key level. If you don't remember anything else, just remember the 21-day and stay with that.
Yeah. Okay. Well, this is a great segue to our other charts that we want to take a look at. We want to go to Trading View, and we're going to be looking at the Webb RSI. And he's going to pull that up shortly. So really what we are looking at is where we are versus the 21-day line in ATRs. You have that queued up soon, Webby?
Yeah, I do. Sorry about that.
No, it's okay.
I'm a little slow. It's been a long week. So here is the Webb RSI, which is just technically it's the Webb RSI version 5.150, which converted the original one into ATRs. Just don't get hung up on that. Just a different way of measuring your distance, your average true range, your average distance from your high to your low over your last 21 days versus your low of your 21-day exponential. So I've just made it simple with this down here. The blue is what you're wanting to see. That is showing your measurement in ATRs. ATRs over here. So this is 1 ATR. This is 2 ATRs. This is 3 ATRs. So that is one normal day of movement above your 21-day. This is 2. This is 3. 3 starts to get a little overheated. 1 to 2 is your sweet spot. And when you have a follow through or a follow through in spirit, you want to see that power. You want to see a wall of blue. And you were referring to that, earlier as far as that oomph that you want to see. When the market turns, you want to see this type of move in there. Now that we're, just honing in on our recent action, you want to see this continue to build. You'd like to see it get as high as possible, even a 2 or even a 3 out of the gate. And then as time goes on, then it could kind of slow down and stay within that 1 to 2 range. Let's toggle over to the NASDAQ and look at that. And I'm going to zoom back out so you can see. Hold on, sometimes the scaling messes up. Okay, so back after our 3 waves down, 1 wave, 2 waves, 3 waves, and we started off here in November, you can see this wall of blue that happened, and then it came back down, or Webb RSI came back down, but it stayed blue. That was our sign that, it was acting normally. That's the type of action we want to see. It was happening over here. Now it's happening again. So we want to see a little bit more power. It doesn't have to happen next week, but we want to see this build out over the coming, month or so, or maybe 2 to 3 weeks.
Yeah. That definitely would be ideal. Now we're going to take a look at the off high indicator that you've developed, and I think there's there's positive developments here, right? We're in the green. I like being in the green.
Green is good. Okay, so this is my little Bob Marley thing down here. And this is again measured in ATR. So we'll talk about it in later shows when we have more time, but really you want to stop thinking in terms of percentages and start thinking in terms of average true range, because that will make all things equal. So if you were looking at a SPY, or like let's say the Qs versus the triple Qs, or I mean the TQQ, which is 3 times the Qs, it'll all work itself out when you look at a true range. When you look at percentages, everything gets messed up. So again, this is just saying that the green area is within 4 ATRs, and that's what I found, that when you're within 4 ATRs of your highs, of your 52-week high, your 18-month high, that is significant and it's positive. You want to stay above it. And once you start getting below it in the 4 to 8, which is your yellow area, that's your cautionary zone. That's where you need to start getting defensive, sometimes very defensive. You get into your 8 ATRs off your highs, and wow, you really got to look out, because things can get really ugly. So let me, kind of zoom this out, and you can see, let's go to the NASDAQ, and there were times where it was off the charts down there during the bear. Then we came back up, and here we were staying within the green. You can see we bounced off of that 4 ATRs, came close to it, came down to it again, and we broke. That's where you had to get defensive. And now, once you started getting back into that green zone, was over here on the 26th of April. And let's blow this up a little bit more. And that's right here. And now we've been staying above it this whole time. So very constructive action. We'll keep an eye on that every single week. But, that's another way of slicing. And I'm going to stop sharing. I'll let you control everything, because you frankly do a much better job than I do.
No, we make a good team. And okay, so we want to address perhaps the elephant in the room, or at least something that we get questions about, which is...
You mean the elephant in the dirty bathtub?
Yes, exactly. And that is for a textbook or orthodox follow-through day. As you mentioned, Webby, not only do we want to see a notable price move, but the textbook definition means we have volume heavier than the day before. Now, in this rally, we have not had that. That's why you've talked about 2 days in particular being follow-through days in spirit, because the price action was there, the look of it was there, looked like a duck, quacked like a duck, but it didn't have that volume. So you set out with Justin to look at history, like you guys are so great at doing. Okay, let's roll up our sleeves and look at the charts and see when there were periods where we had similar action, where you had the bullish price gain, but you didn't have that volume requirement.
Yeah, so this is something that Justin went ahead and sent to me yesterday. It's Justin Nielsen's 50th birthday, so please give, he's done so much behind the scenes for how to make money in stocks, successful investor, all the Bill's seminars, so much work at the workshops, so much work with me. He's done so much behind the scenes. IBD would not be where it's at without Justin, and a huge happy birthday to him.
Yes.
One of the best guys I've ever known. So moving on from that, and that's why I nicknamed him the Saint, because he really is a living saint in my eyes. So he sent this to me at midnight last night on his birthday. And it was because he pretty much knew I was going to ask him for this. So this was other times where we've been trending above your 21-day, 5 days with your low above the 21-day. It's an important part of market school, something I did with Justin and Charles Harris. Started that back in 2011. That we built that. And anyways, we'll get to that in a second. But this was March 16th, 2023. Also Wolfgang Van Halen's birthday. Just need to note that. Eddie Van Halen made a song after that date. But this was a follow-through day in spirit, meaning you had the price action. It was up 2.5%, and we only needed 1.25% at that point. So it more than doubled what we needed. Right now, in the current market, we only need 1%. At that point, I believe we needed 1.25. So we had double that, but your volume was less than the prior day. Yeah, it was pretty much at average, but we don't look at average volume on a follow-through day. That was one of Bill's rules. You just need it higher than the prior day. If it's above average, that's nice, but it's not necessary. So let's fast forward until the next date. So that's kind of similar to where we're at now. Doesn't look exactly the same, but this was a time where your low was above your 21-day for 5 days, an important amount of time, and you still didn't have a follow-through day. So you will really want to do lean bullish at that point, even though you didn't have a classic follow-through day on the NASDAQ at that point. Still, based off the NASDAQ, you're trending above your 21-day, and you wanted to pay attention and start, getting exposure. And now let's go out from there to see what happened.
Mm-hmm.
So we'll go out to my father's birthday in July there. And you can see that from that point, from that follow-through day in spirit, you had this really nice move. Now, it wasn't always perfect. And look there where it hit the 11. Yeah, right there. That's what I was saying that would be normal for us to do, of just back and forth action.
Mm-hmm.
And we want it to stay above the 21-day as it does that. It doesn't always do that, but some back and forth action is constructive, and that had a nice run. So now let's toggle back to today's action. Now get this in your mind, what this looks like, and you can see how this looks similar. We had our follow-through day in spirit, so meaning follow-through day action. It was up enough, but you didn't have your volume higher than your prior day. So Bill would not call that a follow-through day. IBD as an organization uses volume, even though myself, I don't. But that's fine.
I would say, and I'm so sorry to interrupt you here, but that doesn't mean that we're not going to increase exposure.
Exactly. And so we were flexible, right? So tell them what we did.
Yeah. So we raised exposure, even though we didn't get that textbook follow through day. So we went from 20 to 40% to 40 to 60%. That is where we are at now.
Yeah. And that was something the whole team was involved. It's great working with his team from Dave to Chris, of course, to, everyone, Ken, everyone was Mike Larkin. Everyone was involved with that decision. Of course, Justin. Of making those changes. It's a group effort.
I chimed in just for people listening in case they didn't know.
Oh, I'm so sorry. I thought that was obvious. So people don't know that Allie has been with us almost 10 years.
Yeah.
And in that time frame, I've never, and I'm not just saying this because you're on here.
Oh, you're saying that
I say it the way it is. So you listen up, that I've never seen anyone learn as much and absorb as much as you have in such a short period of time, especially the time that I was away from the family. For my 3.5 years that I was away, you were just, my God, the leaps and bounds that you've made. You were good before. So I don't want to say you weren't, but oh my God, it's like a new person, never seen anyone with that fast of a learning curve. So how that impacts all of you.
This show's long enough. We're at 51 and a half minutes.
It doesn't matter. Okay, let's stop it.
No, we're at 45 minutes.
The point is, for everyone listening, me just not being nice and
I can do it. You can do it. That's
you
the
can do it.
Of the story.
Everyone listening can do it. You can speed up your time. Bill would always say there was a 3-year learning curve, but you can speed that up 1.5 years if you really put your mind to it. You can do what Allie did, but obviously she's got 10 plus years. But anyways,
Yeah.
so the point that we were talking about with that other example was when you're trending above the 21 day, doesn't matter if you have a follow through day or not, you've got to change your mindset.
Yep.
Now we're going to put, I think you're going to put in the show notes there, so the other examples that Justin came up with. So please go on YouTube and look at those, study those. That's your homework over the weekend. Look at all of those and see the other times. Again, you didn't have an official follow through, but you did start trending above your 21 day. So that's your homework for the weekend.
Yes. So exclusive to our YouTube audience. If you're watching this video, the archive over the weekend on investors.com, go to our YouTube channel, and you can even subscribe to our channel to watch this show live. And in the description of this video on the YouTube channel, I'm going to put the homework with all of those dates that Justin and Webby came up with for you to study. So that's where it will be, the description of the YouTube video. So after we wrap here, I'm going to copy and paste that into the description. So it's not in there right now. I know we have actually a lot of live viewers. The live chat for this show seems like a fun place to be on a Friday afternoon. So just thank you so much to this community for caring about what we do and for adding to the experience, right? And helping each other, learning together. We're all one big family. So thank you all so much. For those of you who are watching along live, you get a gold star from and our deepest appreciation from me and Webby.
Yeah, and those comments, I do read all the ones that are filtered through. Thank you for those. I've got thin skin, so if you got something not nice to say it to somebody else. But all of any constructive criticism that you have, anything you want to see more of, less of, please put it in there. We will take it under advisement. Do it if we can. And one other homework assignment: just really appreciate your family. It's Mother's Day.
Yeah.
Those of us who are blessed to still have their mother with us. I'm not seeing my mom this weekend. I'll see her next weekend when we're going to celebrate. I've got the perfect parents. Really do. And they watch this. So happy Mother's Day.
Yes. Happy Mother's Day to everyone out there. And that is it from us for this week. So thanks everyone for tuning in, and we will see you on Monday morning on IBD Live. So look forward to that. We also have a swing trader webinar coming up on Tuesday that you guys are doing. So
now,
go ahead.
Let me just say, do not miss that. With Swing Trader,
Yeah, that's important.
Justin, Chris, Dominic, and I have been making a lot of changes to that, and we're going to discuss those on Tuesday. We're also going to announce something really cool that we're going to be doing. That I'll just tell everyone now. Can I tell them?
Yeah. Well, this audience, you heard it here first. You get the homework first. You get the hot tips from Webby first. So you get the news first.
Okay. So since you blessed it and you're in charge of everything video, we are going to start a weekly Tuesday video. It's mainly going to be Justin and myself. Sometimes Chris might pop in, or Dominic, but we're going to go over what we're doing, why we're doing it, because my mission in life is really on a professional level is to make this show the very best thing out there. Kind of an event that everyone goes to, like the Louis Rukeyser days of old, where we would all go to Wall Street Week and watch it. That's what I want this show with Allie to be. And then with Swing Trader, I want that to be the best product out there, not in IBD, out there, period. And so I'm going to do everything I can. And one of the things is communicating. Why are we taking something off? Why are we putting something on? Why are we hedging? Why are we cutting something that's flat or just up a little bit, or adding to something? We're going to talk about it every week. Everyone can watch, but you have to subscribe to see it in real time.
Right. And I think that's the key. This is open to everyone. This isn't just for subscribers. Obviously, it is for our subscribers. It is for our Swing Trader members, but this is open to everyone. So we want you to see it, check it out, see what it's like, see what the guys are doing. Webby, you and the swing trader team are crushing it. I'm just so
No, we're
excited
not crushing it yet.
for the foundation that you're laying
We
for
are.
what's to come with the next when we do get the next power
Yeah.
trend.
So what people have to realize when they look at swing trader, and I know we got to wrap, but with swing trading, when you're trending, that's where you make your money. When you're chopping around like we've been doing since I rejoined, that's you're going to get chopped up. That's the style of it. That's to be expected. We're going to talk about that on Tuesday, but we're going to talk about what we're doing, why we're doing it, and I just think it's going to kick butt.
All right, great.
You
And
say that, right?
Yeah.
I
And I did open YouTube. So I just want to give a quick shout out to some of our live. This is gonna be like the Peloton class where
you can do it.
People get the shout outs. And I'm not gonna get to everyone, but we've got Canmeister, Brent, Neil, Alan, Mary, Alice, Just Askin, James, a couple of others, Ned, Journey Life, Emmanuel. Lots of great Charlie, Jeff, William, Jerry Garcia.
There you go.
Yeah, we'll end it on that one. All right, good stuff. Well, thanks so much, everyone, for watching, and we'll see you back here next Friday. Hope you have a great weekend.